Morning, everyone. So AUD/USD. So yesterday, AUD/USD wasn't actually using the DXY weakness in terms of its correlation. AUD/USD was simply moving in complete sync with the DXY. Now, looking at AUD/USD now, for me, it is acting more in line with how it should, as we would usually say AU, GU, and EU. We would use the correlation from the DXY to take an opposite directional position. Now, what I can see here is that if we have a quick glance at GU and where we would expect GU to go before looking for a short position towards the upside, up towards that 4-hour order block 15 refined and 4-hour 50 EMA before looking for a short. Now, if we flip-flop over to AU, we've had very much so more of the same. Now, we're expecting AU to do exactly what GU is doing, if it is correct that for now we are expecting DXY weakness. Let's say if strength then starts to step into the DXY for a DXY pullback for continuation short, then indeed AUD/USD should come up to this nice point of interest in line with DXY strength. Let me just take a quick look at that to double check what I'm saying. So if we're expecting dollar weakness to bring AUD/USD back up to those highs, then indeed price should fall back down. That will then bring us to a nice area in the market to take an opposite directional trade in the opposite direction. Where would that make sense? So if the DXY continues its bearishness, where could it find some points of interest for a potential turnaround? So we could look at this imbalance here, or more so we have that 4-hour order block just down here. So this is DXY weakness that we would then hope would allow price to be driven further up into a point of interest for a short. So we are correlating now with the DXY in line with what we'd expect standard. So let's analyze the DXY. Why would it be a good time or a good place to be looking for a short position? Well, first and foremost, price hasn't tapped into this daily 50 EMA at any point, so it still remains there. But nevertheless, on the daily time frame, we can see that price is respecting that daily 50 EMA. Looking now at the higher time frame, even higher rather, the weekly time frame, there's not a lot to really take into consideration there. Price is just bullish. So we know even higher time frame, any short position on AU would be against all form of higher time frame trade. Nevertheless, we're intraday traders. We're able to take a small fraction of the market and make that make sense. So in terms of the 4-hour time frame, that's really my bias on where I'm starting to really look for the short position. So of course we're bullish, and then we did nothing up at these highs for a very long time. Now what we can see here is if we start to dissect this market, we can see continuous slight breaks of structure. One here, prices continue to the downside. We've then used that order block at the highs, prices tapped in and it's fallen and broken structure. So if I draw that on, you guys know I love to illustrate. So we did nothing. We came back up to that order block. Price has now broken structure. So after a break, we're expecting a pullback. Where could that pullback be? Into the most recent order block on that time frame. So we've got an order block up here which has been mitigated, and then below there we have another order block around the 4-hour 50 EMA, which also could make sense. We'll have to make it make sense first and foremost. Let's head back to the daily to see whether or not a 4-hour order block makes sense to be there. At the moment, we're using it simply based on structure. The only drawback is once we have 2 order blocks that we're happy with, when we refine those order blocks down, we're going to then have 2 15-minute points of interest as well, which you can see as we superimpose this onto the 15-minute time frame. If we're looking to refine that area down, here is that 15-minute order block. Now the second question we need to, or whatever question we're on, we need to understand is, does this 15-minute order block make sense? Well, I can clearly see just one place in the market where price has broken. So this would be the first break. Therefore, pulling back into that area of imbalance, of course, you're going to need confirmation when price gets back up to that area, because just like on the EU and the GU trade that I've taken, when you have two forms of imbalance left behind that's refined, of course the better area is indeed to short from the highs. Nevertheless, in terms of this current order block that we're talking about, we are very much so shorting from the highs. And what I mean by that is, well, of course there is an order block here as well, and for me it's not even to be considered because we are no longer shorting from the highs. However, price doesn't always want to do what you forecast it to do. So if price comes up into this area and gives me a nice bearish engulfing candle, it's at that stage that I'll be looking for further confirmation, not just the engulfing, not just an imbalanced trade from the 15-minute candle to the downside. I'll then wait for price to leave me an imbalance, not only on the 15, but then I'll wait for the lower time frame break of structure. That will leave me an imbalance on the 1 minute time frame, and then I'll take the position from there. So I'll wait for my full degree of entry criteria when I'm taking a position from a position that is not from the highs within an order block that I like. So I hope that makes sense. So for now, I'm not going to put it on there. I've got an alert set at this order block just there. Right, so that certainly makes sense. We've only had one break of structure, but nevertheless, it is what it is. It's a break of structure as a result of this area here. If we draw that on with illustration, higher high, higher low, higher high, higher low, higher high created. We've broken structure, giving us a lower low, pull back into imbalance for a continuation short. Now at the top, more of a longer term or more of an obvious order block would be simply within that 4-hour order block. That is what's caused that break of structure, refine that area down, and we can quite clearly see from within that order block that we're using now, we are again shorting from the highs. So we're in good positions. If I put a circle around that so you can see where I'm looking. Right, so therefore, two areas that I'm interested in, and this area is going to require the full degree of entry criteria. The area at the top, I'll be more aggressive there. So that would be a bearish engulfing candle. As I said, aggressive. The reason for that is because I understand potentially that I know I'm shorting from a higher time frame uptrend anyway. And therefore, in terms of me looking for short, this is going to be my last place for a half decent short, just looking at structure on the 4-hour time frame. If we illustrate that also, it's mimicking the 15, so we were making higher highs and higher lows. We then had that break of structure, pull back into the imbalance before continuation short. So the short positions most certainly make sense. Then if we tie that into the DXY, for price to be driven up to those highs on AU, we need DXY weakness. Can we forecast DXY weakness from current position? Yes, we potentially can. Where could that go to? Potentially this area of imbalance, which would be, if you have a look at AU, potentially this area here. And then on the DXY again, if the DXY doesn't respect this 15-minute order block, again, the reason why that could be an order block is simply an immediate break of structure like so. However, the better position would be down here. Again, however, the better position would be up here. So it's correlating, it makes sense. Just to put the cherry on top of the cake, is there a 15-minute order block within this area? Let's have a look to see. Down at lows, nothing. So it's just an order block right there. So as you can see, two clear areas on the DXY as well. So when you've got two clear areas, much of what I've just said, confirmation would be required. Nevertheless, it makes sense. So AUD USD, very much so in favor of short positions. I wouldn't have taken a long as I've taken a long on, what is it, GU, because we don't have that additional confluence that we had for that GU long. So for GU, we recognize we bounced off the 50 EMA, etc. That's already in the GU video. So I hope that makes sense for AUD USD shorts going into London. Hopefully that doesn't occur in Asia as well. But even using that in terms of my take profit now, since I'm in GU, that would make sense, right? So I've got two clean areas where I should really be looking to take profit. That imbalance there, and also that imbalance at the top. So some really nice examples here of how you can use the DXY, another pair such as AU in this instance, for even looking for reasons why you should be looking to take profit at certain areas. So if you look at DXY again, two clear areas down the lows, that would be my two clear areas for take profit positions on GU longs. Also then using AUD USD, those are the two clear areas on that pair where you'd be looking for short positions post confirmation. Thanks guys, I hope that makes sense.